Hello everybody, it's Christopher Mullen from thegoldanoilguy.com. It is March 11th, 2010, and I just wanted to show everybody a quick gold trade that happened on March 9th. It was an intraday play. I'm using gold futures for this example because it is what I use to trade, and it also shows the full picture of gold, because if you only follow GLD ETFs on the New York Stock Exchange, you don't actually see all the price action for gold. You're only seeing a very small section from 9:30 till 4 p.m. As opposed to the futures, you get about 23 hours of trading around the clock. So you're missing literally 2/3 of the price action of gold. So you definitely need to watch the futures if you want to get a full understanding of all the price points and support and resistance levels and current trends. So here we go. This is a chart of the gold mini. It's a 4-hour chart, so each candle is 4 hours. There's about 45 days this whole chart covers. And what I want to show is kind of how I came across this setup. On March 8th in the evening, which is the bottom of this red long candle here, I kind of saw it pull back to it's a pretty obvious support level here, and I thought, well, it looks like it could be a great long trade, so I could actually buy it and get a nice bounce off it. But I know the way the market works, and generally the market will pull back much deeper than what you anticipate. So I was looking for a pullback to the middle range, which would be about in the 1115 area for gold, and I wasn't going to do anything unless I saw a setup happen like that. Anyways, a few hours later, throughout the night when we were sleeping, the market continued to flag sideways, and it actually started to slide, and it caused an actual spike down, and it actually dropped down to about 1113. I'm pretty sure. We'll find out when we zoom in on the closer chart. So anyways, it did drop down, and then it rallied. It doesn't look like much of a rally here, but when I zoom in, you'll see how, believe it or not, this tiny wick here provided an excellent trading opportunity with low risk, and allowed us to grab about $6 per ounce profit. So again, in short, I saw it drop down to a support level here. I wanted to wait for a much deeper pullback, and we ended up getting that, and it bounced. So I'm just going to zoom in here to the 5-minute chart, and I'll scroll back to March 9th. And this is pretty much the trade. I was looking at the market here, which is the bottom of that long red candle, because the gold sold down. This is where I was looking before I went to bed. I went to bed around 11 o'clock. And through the night, gold continued to slide, and here's the 1115, and it actually dipped. Okay, well, it actually dipped all the way down to just past 1110. Anyways, volume picked up, which is kind of like capitulation volume. It's panic selling. Everybody gets flushed out of the investment, and that is a very good sign that prices are going to reverse and bounce. So let me just scroll forward here. We can see that prices started to bounce and they rallied, and now we're back into March 9th, and the markets are open right about here, and throughout the morning it forms this nice little bull flag. And after a wave down like this, kind of a B C retrace, and you see the volume flush out, it's usually that third wave down is what flushes investors out, and it always seems to flush everybody out just before it reverses. So I had my nice ABC retrace, or correction, a 3-wave correction. I had my volume showing that people are actually panicked out of positions, and stops were triggered, and a lot of people were flushed out, and we got a nice bounce up, and we got a bull flag. So I just took a simple long position right in this flag. I wasn't trying to get down near the bottom or near the top or wait for breakout. I just simply took a position in the middle of the flag, and I put a stop just below the flag low, and I just let the trade run its course. And through the morning up until about 12 o'clock, You can see gold just had a beautiful run, and the way that I calculated this move was pretty straightforward. It's just a basic technical analysis measured move. You take around the low. I never take the exact low because I always want to make sure I get out before everybody else. So I take in the middle of the low to the flag, and if you look at the price points here, you pretty much get 2 4 $6 move. In a measured move, you simply flip that to the upside, so 2 4 6. So that was where I was looking to start to pull money off the table, to scale out of my position. And what happens when I reach my first target, I'll usually sell about 30 or 50% of my position to lock in the gains. And especially because gold started to actually pick up speed up there and started to really rally, that's a sign that everybody's piling in, and that means I want to get out. So that's what I did, and I just let the trade kind of unfold for a while. And after I had made a low, I was counting on a mini three-way pullback similar to what happened down here, and I put a stop, and I eventually got shaken out right here. I had a stop set below here, so the other half of my position I got triggered down here. Anyways, it was a perfect trade, simple, clean setup. Got in on a bull flag, had a stop set under the flag. We had the nice three-wave flush out and a simple measured move, and it was a perfect $6 trade, and it happened right into noon. So that's a simple intraday gold trade. These things don't happen all that often. I get generally one trade like this a week. Sometimes I find it on a 5-minute chart. Sometimes I see a nice setup on a 30-minute chart or 60-minute chart. Sometimes even a 4-hour chart. Obviously, the longer the time frame, the bigger the move. So a 5-minute chart, it's a fairly short time frame. I don't go any shorter than that. So a $6 move is very good for a 5-minute chart. You start looking at a 1 or 2-hour chart, then you're starting to look at $10 and $20 moves for gold each time you get a nice pattern setup. Anyways, that's about it. I hope this kind of clears up any information that people have on how to trade gold. It's crucial to be using the futures contracts because you need to see gold how it trades 24 hours around the clock, simply because trading the New York Stock Exchange hours with ETFs, you don't get to see anything. You actually only see, I'll just quickly show you here. If you're trading with just ETFs, the only thing you see is, just see if I can pull up a tool here. Well, I can't quite find it, but more or less you see 930, so you see right about from there to there. You don't see this flush out, you don't see the volume, you don't see this run up. All you do is you see gold open right in this level here, and that's about it. I guess if you're a breakout trader, you could buy it on the breakout of a high, but you really don't have any good reasons to do it. The previous day has a resistance level up here, so you wouldn't have much room to do it. It's just it just doesn't provide the information you need. And this measured move that we had, of the $6 measured move, it actually coincides with previous highs. There's actually highs back there that actually at the same level. So everything seemed to unfold perfectly for this trade, and that's kind of how it should be done. You kind of cherry pick. You sit back and just wait for a good setup. Anyways, I hope this helps, and I'll talk to you guys later. Bye bye.